Hey folks, let us begin this video now. I want to take you through Volatility 10 index. This is on a minute 5 time frame, and we want to learn about institutional order flow and market structure. That's basically what we are going to learn here. We are also going to learn about how prices seek liquidity and what propels price to seek liquidity before making the runs that we want to participate in. So the red line here is the monthly open, and it has been marked on your chart. The daily open is also marked on your charts, and let us just explain this setup above here before we move on. So as you can see, all of this happened during the last quarter of the previous day kill zone. Our kill zone of the last previous day quarter, it starts from 20. Let's just mark it out. 2023. So at 23 is where our kill zone was ending, and as you can see, the prices just took out opposing liquidity. The relatively equal highs here had buy stop resting above them. So after taking them out and we were above the 50% of our initial displacement, we sell the market above 50%. Our levels were predetermined also. There was one below, just slightly below the monthly open at 161.8. Then the other one was the one that resulted to the break of market structure, the break of structure, and you also can pay yourself below this sell side liquidity over here. And now there's the 261.8, which was hit, but it was hit later. As you can see, the projections are also available. So basically, let me take you through this, and I want to show you the how markets do continue a trend, and how they do reverse a trend, and sometimes they just consolidate and they cannot give you enough information or data to enable you to make sound decisions. So like this one, the market is evidently bullish, is evidently bearish, that is, and as you can see, the daily opened and broke the structure to the downside. You mark them out as they do happen, and as you can see, a retracement was found above the 50% of our new dealing range, the one that broke the structure, the downside. Now we are extremely bearish, so when prices start moving higher, you must be very happy because you're just waiting for your system to unveil. You're just waiting for your system to unveil because you know now that the prices are weak, and you just know by the market structure and how they are flowing. For example, here the stop loss is already placed, and I had already show you how to place the stop loss. We just place our Fibonacci reversal tool from this high here to the low, and as you can see, the relatively equal lows here, they act as magnets to prices, and they tend to pull prices towards them very quick, and oftenly those movements act as low reserve liquidity runs. And I'm just about to show you what happened, because that's what happened basically. We took out buy side, then had a stop run, a stop hand, then the stop hand happened just after our kill zone open. This is the third quarter of the day now. The third quarter of the day, popularly known as the New York kill zone, and it's basically from 14 to 17. It takes 3 hours, and that's the best time to take your shorts or your longs, or to stock your setup. And as you can see, our setup presented itself by breaking and stop trading the buy stops over here. And on your left, you can see we are also on the above the 50%, and these are basically like fair value gap. There's also a fair value gap here and an order block, because it's being coupled by a fair value gap. So the prices are very weak, and this information alone is enough to tell you that we are about to take the shorts. So I would like to drop down to, I think let us drop down to the 3 minutes time frame so that we can see things better. Exactly, this is a 3 minutes chart, and as you can see, buy side was taken, then sell side was also taken, and our kill zone opened at exactly 1400, and there's a swing low that it engineered and broke and raided the stops above here. After that, you observe, you don't react, you observe what prices are doing, and your setup, after your setup being presented to you, you have to take your step with no pressure, with no negative thoughts. You just take it, just follow the system to automatically, so that you think you know what the price is going to do. You don't know anything, you just do what the market is doing, and trust that the process, trust that the system will either fail or work. Those are the only two options you have here. There is no magic. So after the market break the market structure to the downside, this is a swing low that has been broken hard. Any retracement above 50% after forming a swing low, we sell them. And as you can see, evidently there's also a fair value gap, like a small one here. There's like a fair value gap, like a small one, and all of these candlesticks, you are seeing them, this 1, 2, 3, the consecutively bullish candlestick, you are seeing them on this chart. Those are the ones that we do refer them as the bearish order block. Let us just mark it out so that some individuals here can see. You know, I'm just taking you through this stuff, and I want you to go and practice these things by yourself, and you will see and you will appreciate what I'm trying to tell you here. So I'm just showing you the order block. Allow me show you the order block. There goes the order block. So this blue, small blue line here is the bearish order block that is resisting prices to the downside, and just beneath the order block, let me just write it there so that people can understand what I'm just showing. That's the order block. That's the order block. We've got an order block that is slightly above 50%, high probability. Your stop loss is also placed. You just measure your stop loss, not something you go and guess. 25% of our upper quadrant. That's where we place our stop loss. At 25% of our upper quadrant. Let me place there a red line. They are very frustrating. These things are frustrating. So this red line here, stop loss. I hope you can now see the stop loss, and it's a measured move because it's at 25% of the upper quadrant. The entries are above 50% slightly. The inverted fair value gap, and the red line you are seeing here is the monthly open. this red line. So you can just see how effective our setup is. You can see how effective this point is. You can sell multiple times here. You can buy a vehicle just selling this market here with a big lot size, but it's not advisable to do that. It's not advisable because people do make millions just from these moves, just from this move, as you are seeing it. This one, it can make you a millionaire. This is a model, it's an ATM machine that has been tested and tried. So it's just upon you to go and now do your own research and find it by your own efforts. Just being given, you can't appreciate it. You'll never appreciate being given this system for free. You'll never appreciate, and you'll in fact ignore many things and become arrogant. But let me tell you, if you just become humble enough and you go into your own charts, because I know it's very tough, it's very boring, and very few people can do that. Very few people can do that consistently, and very few people can do this for a living. Because let me tell you, it's something that requires an unbiased mind. It requires a mind that is focused, a mind that has little distractions, just a calm mind. And let me tell you, I'm just showing you this, and I want you people to go and try this system out. So basically, let me now explain to you I want to explain to you how the candlestick psychology, like the line that I'm just about to draw here. It's the third quarter open, this current line here. And it's also a 4-hour open. Those are some of the best case scenarios that you'll never find in the marketplace. The best of the best. And as you can see, evidently, after buy side being taken, there's a break of structure that happened. I hope you can see. After that break of structure, as soon as we opened, this is the 2-hour open. As I've told you earlier, 12 is the 4-hour open. So this is what has happened during the 2 hours. From 12 to 14 is what has been happening during the 2 hours. So the second 2 hours are now the hours for expansion. This is just basic psychology. Nobody will come and tell you this, because the prices will not remain around forever. And as you know, we were extremely bearish on the daily, and the prices are above 50% of our bigger dealing range. And now our killzone has entered. We have broken the structure to the downside. Now we are experiencing a stop hand. Then this displacement, when you see it, you now start laughing at those people who are trying to buy the fair value gap. Because the narrative is what tells you everything. Because evidently this is a fair value gap, and anyone can argue that we have displaced, we have taken sell side, we have displaced to the upwards, and now we are buying the fair value gap. And the monthly opening will now act as a resistance. You can even think like that, and just in a matter of time, your stop loss gets hit. So the factors that are making us to take shorts here is that there are relatively equal lows here. The prices are above 50%, and remember, we were bearish. It's not that we were just creating a buzz here. We are following the market structure and what the candlesticks are doing. So the order block, as I told you, order block are the last 3 or 2 up close candles before an down movement or an up movement. Before the down movement, that's a bearish order block. Before up movement, that's a bullish order block. Order block theories is a very difficult topic, and ICT has also been stressing on that point that much. And understanding ICT's order blocks and how they work is also another masterclass that whenever you see me advertising it, you have to join immediately. Because as you can see, these are bearish order block, and you can see how effective it is. It's very effective, coupled with an universal fair value gap and a monthly open. Let me tell you, when you catch a movement like this one, you'll be the happiest man in this world, because they happen like every single day in the market. They do happen, you cannot deny. So a first target after taking side liquidity, pay yourself. 161.8, pay yourself. After taking side liquidity, you pay yourself. Then after 261.8, you also pay yourself. So these are system, these are model that I've given you that you will be using forever in your life. And it's not that I'm advising you to go and start trying it out today. What I'm telling you that is that go to your own charts, back test, find your own system, find your own unique way of interacting with these candlesticks. It will just come, it will just be part of your DNA once you do it for quite some substantial amount of time. Not a 2 weeks course, a 2-week open. I mean, after 3 months and you think you are now a pro and you can do this thing up to and make money consistently. You just have to be slow when trying to make money on this stuff, and to have a model that is logic, that even if the model makes you lose money, you don't feel like this is the worst decision you have ever made in your life, engaging yourself into making money cooking candlesticks. If the system fails, then you are content because the research that you have done and the parameters that you had placed were up to date. And if the system fails, then that means the system has failed on your favor. It has failed because if the system parameters were never placed there, that means it could have caused more damage than good. So I thank you for believing in yourself. I thank you for also believing in us, because you know, someone just subscribing and watching your YouTube channel videos. This, you know, this is an educative forum. This is like an ordinary library, and I feel so happy when people come by and they watch my videos. And I also want you to challenge me in some ways. I want you to tell me something you have noted in my videos, what I can correct, what I can discuss with you intensely so that you can understand, where I can make things clear. It's a consultative forum. It's not something that you'll have to stay on the sidelines forever. You'll have to show up, and if you are really studying my stuffs, then you could have already consulted. But for those that are just watching as if they're watching Netflix movies, I promise that they're just wasting time here, and they should go and do something else. This is like a course. This is like a course in a university, and you just have to listen. You just have to take notes. You have to study, do your homeworks, back test for a test. It will take time. And you just have to invest on it. So thank you. Bye bye. And this is what I had for you today. Until we meet again tomorrow, just be safe.